Welcome to The Explainer. So if you've been watching the charts lately, you know exactly what we're talking about today. We are breaking down the absolute roller coaster of volatility hitting the semiconductor sector right now. The market has been throwing us some serious curveballs, hasn't it? So today we're digging into the critical data to answer one massive question. Are we staring down a catastrophic top, or is this the ultimate setup for the next big move? Let's get right into it.
Take a look at this striking quote from our source material because it perfectly captures the anxiety gripping the market right now. Today was an absolute bloodbath. Pretty much every single semi-stock is printing a hideous-looking weekly candle. Oof, it's a heavy statement for sure, but as we're going to see, the charts really don't lie. The selling pressure was literally intense, sparing almost no one in the sector and leaving all of us to wonder what on earth happens next.
To figure that out, here is our game plan for today. 1. The semiconductor bloodbath. 2. Nvidia, reclaim or retreat. 3. AMD, the music stops. 4. Broadcom, mind the gap. And 5. TSM, the silver lining. All right, starting with part 1, the semiconductor bloodbath, a market-wide warning sign. Let's look at the big picture here. Across the board, these high-flying tech stocks have suddenly hit a brick wall, and they're giving us this very specific, totally synchronized technical signal that we just can't ignore. It's called a shooting star candle. Basically, it's a pattern where a stock opens, buyers push it way up, but then bam, it closes right back down near the bottom. It screams potential exhaustion. And what's really wild is that this exact hideous pattern is showing up on the weekly charts of almost every major semi-stock. Nvidia, AMD, Micron, Qualcomm, you name it. Buyers pushed hard, but sellers completely took over by the end of the week. But hey, this is absolutely crucial. We have to stay perfectly objective here. As our source notes, confirmation is key. These ugly candles technically mean nothing without a red week next week to actually confirm the drop. I mean, is the market just baiting people in because it looks a little too obvious? We literally have to wait and see if the market drops next week to validate this whole ominous signal. Moving on to Section 2, Nvidia, reclaim or retreat, the 210 battleground. So looking at the bellwether of the sector, Nvidia has violently flushed down, blowing past initial support to land right at 204. That sits exactly on a key green Fibonacci retracement line, which is a major historical support level on the chart. So we're at a total crossroads. The bullish case? Nvidia needs to bounce off this green level, reclaim that 208 to 210 region, and turn it back into firm support. If it does that, this whole drop was just a massive false breakdown. But the bearish case? Man, if Nvidia rallies slightly, rejects that 210 area's resistance and rolls over, we're looking at a much deeper slide, potentially tumbling all the way down into the upper 180s to 190. That would fill a lingering fair value gap, an empty pocket on the chart where the price previously jumped way too fast. Okay, Section 3, AMD, the music stops, resetting overbought conditions. Next up is AMD. This stock has had a massive, frankly comically overextended run to the upside. It went up and to the right for a long time, totally detaching itself from its historical moving averages. And this quote brilliantly illustrates the reality of the market right now. While the music is playing, we continue dancing, but eventually the music will stop. It's so true. You can't just go up and to the right forever without a painful reset. Conditions get too overbought, and eventually gravity takes hold. So investors are looking at two distinct scenarios here, prioritizing proper risk to reward instead of just blindly hoping for a bounce. The bullish path, AMD quickly reclaims the low 500s, proving this drop was a fake out, and continues riding its 9 exponential moving average higher. But the bearish path, which honestly makes a ton of structural sense to reset these crazy overbought conditions, would see AMD drop down to actually touch that trend line in the low 400s. That is the exact spot where the risk to reward finally starts making sense for buyers again. All right, Section 4, Broadcom, mind the gap, AVGO's crucial levels. Let's see what's happening here. Broadcom, ticker AVGO, has completely lost its immediate support levels, and it's setting up for a very specific technical magnet as early as Monday. The magic number? 380. The source anticipates an imminent gap fill right at 380. What makes this so critical is that it lines up perfectly with its 21-week moving average. That is its absolute first line of defense. You definitely do not want to see this level turn into resistance. Because if it does, the bottom could completely fall out. If the broader semiconductor weakness accelerates, like say we get a contagion scenario where Nvidia drops to 190, this is the domino effect that could drag AVGO down with it.
If Broadcom slices through that 380 gap, the worst-case scenario has it plummeting all the way down to the 350 to 340 region. That would fill that massive fair value gap we talked about and retest an area of heavy historical resistance.
Section 5. TSM, the silver lining. Bullish opportunities in the drop. Let's shift gears to a much more optimistic case. Despite all the market-wide carnage, the source actually considers TSM one of the best-looking and fundamentally strongest semiconductor stocks in the entire market right now. Even with an ugly weekly candle, it's holding nicely above its crucial moving averages. The target to watch is $400. If TSM drops near $400, the source views this as a fantastic, extremely attractive risk-reward opportunity to buy aggressively, or to gobble it up, as they put it. That $400 mark aligns beautifully with the 50-day moving average and offers a prime location for the stock to just round off and continue its bullish trajectory.
Honestly, even in a market-wide meltdown, the absolute floor for TSM seems incredibly contained compared to its peers. The worst-case scenario is a drop to the 375 to 370 range. This would mean losing the weekly 21 moving average, which is an event the source notes is highly rare for this particular stock. So the downside risk here appears way more insulated.
So here's your cheat sheet summarizing the critical levels and worst-case scenarios for the 4 companies we've explored today. Nvidia has got to reclaim that 208 to 210 area. AMD is looking for a proper reset near the low 400s by touching the 90 MA. Broadcom has that massive gap to fill at 380 with a risk of dropping to the 340s, and TSM looks like a prime buy opportunity if it drifts near $400 with a highly unlikely worst case around 370. Keep these numbers in mind. These are literally your lines in the sand for the week.
Which brings us to the ultimate question. Will next week actually validate those dreaded synchronized shooting star candles across the market with a sea of red? Or is this the ultimate false bottom trap designed to bait eager sellers right before a massive recovery? The stage is set for a historic week in the markets, so keep your eyes glued to these critical levels and let's see which path the semiconductors choose. Thanks for joining me on this explainer, and I will catch you in the next one.